If you go to your daily chart, and we had our old all-time high here, okay, they formed as relative equal highs, this high being slightly lower than that one. So that classifies this as a high probability candidate for a run on liquidity. It's less likely when the right side is higher than the left, because we've already done the damage there by running the wick of this candlestick. So we created this short-term all-time high, and we traded lower. Okay, and you can look at your daily chart, and we'll see it in a moment when I show the bigger portion of this. But for now, don't look at the chart yet. Just follow along with this one. And then we had this candlestick here. We pierced it, but look, we only pierced it with a wick. That's not meaningful to me. It's insignificant. It's unfinished business, still above this candlestick high. So on this day here, we have October 2nd. The market creates this open. We trade down, and we rally up here and then come off the high right there. This day, October 2nd's regular trading hours, opening range gap, that's what this 5-minute chart has been showcasing. This day, we have a body left above the previous all-time highs. This right here is much more meaningful. So this day's opening range gap is going to be highly, highly significant. That's why I told you to carry it and go forward, projecting it forward. And you'll look at all these days here, and you'll see those levels, which are these levels here, they're being used. But now watch what happens. I want you to pay attention to the daily chart. Over here, we have a buy side imbalance, sell side inefficiency. Volume of bounce toward the discount end of that PISI, and its candlestick's low is the high. Graded, here's the upper quadrant, consequent encroachment, lower quadrant, and then the low. This portion here of that blue box is being shown right down here. The buy side liquidity pool here is this blue line right there, so that way we can track everything. Thursday, regular trading hours, opening range gap, lower quadrant. This is the opening range gap low on that Thursday. That's this black line here. Consequent encroachment of Tuesday, October 2nd, opening range gap. Here's the upper quadrant. And here's the high of Thursday's opening range gap high. That's what's being shown here, okay? Over here, this candlestick here on the 2nd of October has a little arrow above it. That closing price, okay? Everything I'm saying here, when you're looking at markets trading at lows that you anticipate trading below an old low and looking for accumulation to go higher, you're going to reverse everything I'm saying here. But for now, I'm focusing on how we can not predict. I'm not trying to promise you're going to be able to call the high in the marketplace. I didn't get it to high. But I'm showcasing how you can see real accumulation and real distribution in the marketplace. Okay? Bodies left above, old highs, right there. That closing price, as soon as that day closes and a new one opens here, that price right there and anything above it, smart money will start staging shorts. If we're making an all-time high, or if we're making a long-term high or a significant intermediate-term high, and we expect to see a decline that's tradable, you want to reference in the market when it's bullish. If you're anticipating a turnaround, you want to indicate every up-close price, the closing price. That's what I'm indicating here. So October 2nd, 2025, this price is what's being indicated, which now appears here on this chart. So everything at that price and above, smart money is looking for PD arrays to get short on. They're running out old highs, selling into that. They're selling into that. They're building large portions because they have to act like a commercial trader does in commodities. They enter early. When big positions are sought after, they start putting in positions early. Where do they and how do they do that? Everything above this closing price, anything above that price is going to be chased by what? Retail. But when they're buying it, smart money is selling to them as they buy. So at this point here and above to this candlestick here, all this is where smart money is accumulating swing trading perspective, that kind of like a duration of time, not a day trade, in other words. They're staging in that range shorts. And then we get this day, we have a higher close price than the previous one. See that? So now above that price and higher up to here, smart money is looking for PD arrays, old highs to sell into when it goes above it, or trading back up into premium arrays. They're selling short inside that area. And then finally, we have this closing price here. So we have 1, 2, 3 stages of smart money shorting. They're staging their short positions. As the market's going higher, they're feeding that buy liquidity to the people that want to chase price higher. They keep, oh, it's going to keep going higher. You can see what they're doing with the candlestick wicks. See that? Yeah, we were here at this highest point here, but we closed down here. Yeah, we were high up here, but we closed right here. We were high up here, but we closed way down here. We we are high here, but we closed right there. That's distribution of longs and accumulation of shorts by smart money. Now, this is not a one-time video and you understand it. Please, young men, do not go out there and pretend that you understand what I just said. It's going to take you a little bit of time studying your own charts and studying what price action is doing when it does these types of things. But do not think like this only with all-time highs. Every time the market creates intermediate term or long-term highs, it does these same things. It does these same things. But all-time highs, you want to see an all-time high form and then a deep retracement and then it gets taken out. And then start looking for these types of scenarios. Okay. So here we have this portion here at this candlestick's closing price, and anything above it, they're going to be utilizing premium arrays and selling short of old highs because they have deep pockets, because they are essentially agents of the market where they're literally privy to certain things. They don't have to have the same concerns that you have to have. You want to trade big positions, very, very small stop losses. They don't need to worry about that type of stuff because they're not over leveraging. They're scaling in, they're scaling in, they're scaling in. Now, time element. It's Friday. We're at all-time highs on Thursday. We open up on Friday. We trade up into that Thursday high and we grade that. Okay. Upper quadrant's pierced, but we can't get to the high of it. And we trade lower. As it starts to trade lower, everybody's talking about the comment that Trump made about the 100% tariff on China. And that news is the justification. It's the excuse. It's the news moved the market. Trump's moving the market. Trump is not moving the market. I promise you, this guy is looked at as some kind of messiah. He ain't. The bottom line is this. It is not what he says. It's what the market's doing before he speaks. And now here we are. Here we are. D-Day. Here it is. The market on the 9th. Here's Thursday. Creating the high. Okay. We have the market trading in an area where the October closing price here on the 8th. The 9th, we open, we rally up in this little portion of price action in here. All this, that's being graded up here. You can see those levels here at 25,393 even. That's this candlestick's high. Okay, so it's over here, previous. Looking at it, the bodies are stopping right at consequent encroachment right here. And we're above buy side on this swing high here, deep retracement. It trades down into what I tell you? Thursday's regular trading hours opening price. So that was the high of the opening range gap on Thursday, October 2nd. The only reason why we're constantly keeping these levels on our chart is because on the daily chart, it was October 2nd that left the higher bodied closing price above the previous swing high that made all-time highs. Carry that over into when you're not trading at all-time highs, just using it for market structure purposes. When you're trading above an old high and you're expecting a long-term or intermediate term high to form, you're using the same logic. It just works more frequently because it's rare that your markets that you're trading are at all-time highs. It takes a lot of time to get to these all-time highs in markets. So here we have it. So the point is, the market's already indicating it's tipping its hand. The bodies are not able to close above consequent encroachment of the ninth price action. So when we start trading on the 10th here, it's faltering, it's failing. It can't muster up the strength to get into a run to make a higher all-time high. And we've had 3 stages of smart money shorting. This price that is too far to the left is the old buy side. It trades above it here. That's your first indication that we laid down a body and a closing price at a all-time high, above an old all-time high that was a swing high. So here's the stage 1. Here's stage 2 and stage 3. Anything above those closing prices, smart money is putting in shorts. They're selling. They're selling to the public. They're selling to money chasers, the Johnny come latelys, the breakout artists, the Instagram traders, the TikTok traders, the YouTubers. They're buying on breakouts. They're buying strength. They think it's going to go to the moon. All this is, it's going to the moon. It's going to the moon. Just like Bitcoin. It's going to the moon. It's going to the moon. Doesn't. The market trades right back above, right in here, above buy side here, and taps October 8th, 2025's closing price after just a hair pierce above it. And then that happens. Inversion fair value gap, small little volume imbalance in here. You'll check your price to see it. It's very small, but it's there. Market trades up, falls out of bed. 3 stages of smart money selling above an old-time high, indicated by failure by the bodies not making any headway above consequent encroachment. If it would have been above it, then we might have to make a higher high, but it's not. And I taught you this. I taught you this. This is how you read order flow. It's not level 2 nonsense where you're looking at numbers and attribute that to some kind of prognostication for the future. It has nothing to do with it because there's orders above and below. That ladder is not going to be helpful in terms of direction. It's your private interpretation is what you're believing in, the religion that you created for yourself. But when you start seeing the science that I'm showing you here and the closing prices are giving telltale signs to smart money that it's about to turn. Why? Because we couldn't post a body above consequent encroachment of this wick. And it's time Friday. Oh, it looks like a bull flag or a bullish continuation pennant. Really? Inversion fair value gap. Failure to go higher. We're consolidating. And then we go into the macro. 10:50, 11:10 a.m. Overlapping with London close. Look at your euro, look at your dollar index, and look at your pound dollar again. And then the market starts to drop. People are in shock. Social media is ablaze. What's going on? Trump. Trump did this. Trump said that. Trump said, Trump this. He's the fall guy. I told you in 2016 he would be used as such before he was even elected. And before you come at me, I have never voted in my life. I've never voted for anyone because it's a facade. You're a victim of the left right paradigm. And no matter what side you pick, you're still being deceived because you don't have a say in the matter. If voting mattered, they would never, ever let you do it. So I'm not trying to promote an idea on one side or the next. I'm not Republican. I'm not Democrat. I'm not independent. I'm a monarchist. I'm looking for a coming king. He's not of this world. So my perspective is completely objective. Outside of it, I'm not looking at it through the lens of a party view. But I told you in 2016 that everything you're seeing all around the world and in the US, it was coming and it's here. I told you it was going to be expensive and you won't be able to pay for food. You won't be able to do this. You won't be able to do that. It's happening. I tell you about this in the market. I tell you about that in the market. This is what it's going to do. This is what it's not going to do. It's going to say it wants to go higher with certain things, but retail will chase that and it'll be wrong. We're in the age of deception right now, and you need to make sure you guard yourself against that. And because I'm a man, and you got to make sure that no man deceives you, don't take my word for it. Go into your charts and get your evidence there. Period. So here's where we're at. Inversion fair value gap, macro 1050, 1110, trading at the closing prices, third stage of smart money shorting at all-time high. And one more tap in that buy side, and it careens lower and back into that those Thursday levels. We trade down below consequent encroachment of Thursday, October 2nd, 2025's opening range gap. It wicks through it twice. Where's the bodies? Below it. Why am I using that Thursday, October 2nd opening range gap? Because it's the one that had the daily candlestick close that laid down a new all-time high above a previous all-time high that was formed, that was retraced on. So it should be viewed as what? Continuation. But I'm looking for indications that smart money will fade into that and start selling it. Distribution here inside this SIBI. Volume and balance. Volume and balance. This is what? Suspension block. Halfway point. Consequent encroachment. Can't even reach that. And the bodies are staying below what? Thursday's regular trading hours, opening range gap, consequent encroachment, midpoint level. It can't even muster the strength to come back and kiss it with its bodies. It's weak. It's heavy. So where could it reach for? Go back to your daily chart. We have a swing low. We have a discount wick that you can grade. And then we have the change in the state of delivery down here. See this down close candle all the way past this one. So if we're going to pierce this, this is the last time after or before this candlestick formed. This was the last time there's a change in state of delivery. So this candlestick's open to its high. That is your premium wick. When price is above it, it's going to act as what? A discount wick. So here's the lower quadrant, consequent encroachment, and the upper quadrant. Lower quadrant comes in at 24,166.50. And during regular trading hours, trailing stop losses getting stopped out. It is what it is. But that is a really, really nice run.